Hey there, you're just in time. I've got your file right here. Sit down, sit down. So, it looks like this is your first time in the office here. Thank you for coming and choosing us for therapy. And it looks like you're dealing with a bit of tax anxiety. That's okay. We can work with that. So, tax anxiety is pretty common. A lot of people seem to suffer from this awful feeling when they think about having to do their taxes. And regardless of the history, because there is definitely a history of the reason why taxes are so intense for everybody, our job here is to make you feel a lot better about taxes and to give you the confidence you need to be able to feel good when April 15th rolls around. Well, hopefully you do your taxes earlier than April 15th, which is why we're doing this video now, so that way you have time to be able to relax and enjoy the confidence you feel about doing your taxes. So let's start off with some explanations, shall we? Taxes. The fear that you are trying to eliminate. Well, I'm not going to teach you how to eliminate taxes because that's a little intense and it's not the kind of finance we do on this channel, but that gives a good jumping off point. So, this is as close to eliminating taxes as we get. Sorry, no offshore accounts in this video. A good place to start when talking about personal taxes is the gross income that you expect to make for the year. So that can either be your salary or the hours that you work for the year times the hourly wage that you make. And so then we move on to the above the line adjustments, which are things like payments on interest from your student loan debt or contributions to your retirement account, like a traditional 401k or an IRA. And both of those things are things I want to talk about in another video. But essentially, having those expenses allows you to deduct those contributions or those debt payments from your gross income to get to your adjusted gross income. And the reason we do all of that is because decreasing your adjusted gross income helps you get closer to what your taxable income is likely to be. And your taxable income is just the amount of your income that you're obligated to pay taxes on. So let's look at a numerical example to help things make sense. If you have a gross income of $10,000 and an adjustment of $1,000, that would leave you with a $9,000 adjusted gross income, accounting for both retirement contributions and interest payments on student loan debt. Next up are deductions and credits. Deductions work similarly to those adjustments from before, where they reduce the taxable income that you have available. Meanwhile, credits work directly on the tax bill itself, meaning that dollar for dollar that you get in credit, that's $1 less that you have to pay in taxes. So, I've got my setup here to teach you about marginal taxes. And so, essentially, to give you a preview before I actually show it to you, marginal taxes means that every dollar on the margin that you earned will be taxed for its relevant tax bracket. And so, that sounds like a lot of mumbo jumbo, but essentially, let's look at it like this. This cup is full of water, which represents your income. I'm going to be filling this cup and this tray with water, representing your income. So these are stand-ins essentially for different tax brackets. Now this cup doesn't necessarily have enough to do what I want it to do yet, but just bear with me for the time being. So, the truckers want to learn taxes too. That's fine. That's good. Everybody should learn how to do taxes and learn how to understand their taxes. So I'm going to pour this in. Forgive the overspill. But essentially, we poured the water into this cup, to this tax bracket, right? So let's say this is a 10% tax bracket. That means that from 0 to, $20,000, or basically from nothing until full, every dollar in that range is going to be taxed at this tax bracket because it falls into this cup. Ideally, if I can pour correctly. So let's say, what did I say before? $0 to $20,000. So that's about $10,000. That's halfway. So let's add another $10,000 to your income. So that way you make $20,000 in the year. You're really balling out. Okay, let's. So as you can see, the cup is now full to slightly beyond the brim, but that's more of a science-based thing rather than technical taxes that we're dealing with here. So it's at this point that a lot of people are faced with an interesting question. If they get a bonus or a promotion or overtime or any situation where they're able to earn just a little bit more money, let's say $1,000 or $5,000, how would that affect them in terms of taxes? Now, a lot of people have the misconception that in accepting that extra money, they'll be pushed to a higher tax bracket, have to pay more taxes, and then end up with less money in the end. That's not true, and that's not how marginal taxes work. Essentially, they work just like this setup here. And so, it's very hard to move this. So as you can see, they're full in this range, right? So they're in the $0 to $20,000 range, and so they're in this tax bracket. So you should be able to see what would happen if I added more water to the top of this cup. So I refilled this cup with water, so now you're making an extra, let's say, $5,000, right? And you're gonna pour it to the top of this to represent your income. And it's overflowing. And that's exactly how marginal taxes work. And so basically what that means is this cup is full. So every dollar from $0 to $20,000 is gonna get taxed at this tax rate in this cup. But every drop of water that overflows into this tray is gonna be taxed at the higher tax bracket. And so when you accept that position, or when you accept that overtime, or when you accept that bonus, the extra money that you earn that is beyond your regular tax bracket, or whatever tax bracket you're at, is going to be taxed at a higher amount. But only those extra dollars, only those marginal dollars, just like only the water that overflows is in this tray. All the rest of the water remains in this cup. So I hope that was helpful to understand marginal taxes. So let's get back to the rest of the video. So you understand marginal taxes, you've learned some of the vocab. Now it's time for the magical part that you've all been waiting for. It's time to do your taxes. Okay, spent this whole video dealing with your tax anxiety, so that's not what I wanted to hear. Come on, I'm gonna say it again. It's time to do your taxes. Yes. So from here on out, I'm gonna assume that your tax situation is pretty simple, because if you're doing it for the first time, you're probably really young, you're really early in your career, you don't have that many dependents, nor are you making an insane amount of money. So if you're making less than $69,000 a year, you're actually eligible to file your taxes for free. And so a lot of big tax companies don't really want you to know this or be able to easily find your information. But if you go to irs.gov, you'll be able to find a bunch of different tax softwares that you can use for free as long as you're eligible. And so there's a lot of different categories, but generally speaking, under $69,000 a year, you're good to go. So I actually won't be going through doing your taxes step by step, because a lot of these tax programs actually make it a lot easier for you to follow through. And so each one is going to go through a slightly different process, but it'll all get you to the same result. And putting in my information and doing it with you might not necessarily help every single person. And so giving you the opportunity to find those resources, which I'll link directly in the description, is probably the best for everybody. And these programs, are really intuitive, and they help you to be able to figure out a lot of what a professional might fill in for you. There are some people that, when they're starting out doing their taxes, hire a CPA to get their taxes done when they really don't need it. Not to take away business from CPAs or anything, They're especially important if you have a lot of complex issues that you need to solve, and there's a lot of tax magic that they can work that, helps you in the long run. But if you're 20 and you've got no kids and you're making like $30,000 a year max, then it's probably wisest to save your money and do your taxes on your own using one of these free taxware softwares. Using one of these free tax softwares. Because somebody had to fight for it to be free. You might as well use it while you still can. I personally recommend using H&R Block because you don't have to make an account and it's pretty straightforward. But in general, these will all be really easy softwares to use. So I hope that now some of that anxiety is alleviated, because really it's all super simple. And as it gets more complicated, like every other thing in your life, you'll be able to step up to the challenge and figure it out. This video is really for giving you the basics and giving you the confidence to be able to look at taxes and say, I can probably do that. And that's kind of what you need for a lot of things in life. So give yourself a chance, click on one of those links, do your taxes, and I'll see you.